Congratulations to the shareholders as we knocked out our price objectives with grace and about a 90% accuracy. The upside targets we faced today were my absolute tops with a wiggle for potential FOMO. There are several signals suggesting an upside continuation, but the simpler ones are not. Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into ticker symbol STAL. Let's kill them. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol STAL, where you can see right here, team, I have taken already another screenshot. If you know what I'm talking about, I know you do. If you watch this channel often, I have been collecting all of the prisoners here, right, of the broadening descending wedge, or the descending broadening wedge, making its top side targets and beating them, right? This is yet another one into the collection that we have acquired, team. And I will be releasing a massive, massive collection of these throughout all kinds of tickers over the bear cycle, right, team? So, but yes, congratulations to those who ended up pocketing this, team. We ended up getting a nice, after a 600% run, which was right around here, right? We ended up getting still another opportunity for us to gain another killer session, right? So from the points of entry to the top side here, it was another 165% upside even still, team. So it is looking and it is feeling very good. But I will have to shed light on a couple things first, including volume, right, guys? But before we do so, I just want to go ahead and remind everybody here that I am opening up, well, I already did, right, the 30 seats now for the ARC Masters course. It is a 16-week mentorship. And the track 3 students, right, it's been 30 and now 30. The track 3 started already 2 weeks ago, right? So now I'm opening up another 30 seats. Already some of those seats have been taken, so please go ahead and get your email on here and make sure to get enrolled as soon as you can before they are taken, right? So we will learn all of these analyses, right? Formation analysis here, statistical analysis, the entire thing, discretionary, systematic, the whole thing, team. So go ahead and get in touch with me, and we'll get you started from beginner to advanced, right? So thank you so much for that, team. Let's go ahead and continue on the analysis here and see, right? So of course, during the live stream today, I pointed out that, you know, I told the team, guys, be careful. You know, the top side target for me right here would be the exit of 1 cent, right? That is a psychological target. I felt that we could gain a nice play up in here, right, which was still above 100%, right? And then I also noted that there is still a possibility of these top side targets right over here that we spoke about. Let me go ahead and highlight them for you. 121 to 129. Price action came up to a top side of 126. So it was, I mean, that was pretty dead on, right, team? So that's what I meant by, I said 90% accuracy, but it's more like a 99% accuracy right here, right, team? So now I would like to say that, yeah, some things are still pointing straight to the upside, but some things are not. And what do I mean by that? Well, it's pretty simple, actually. If we go ahead and take a look at the volume profile here, you're seeing a downside, right? You're seeing a decline in volume, and you're also seeing an incline in price. So ascending price, declining volume, that is called a bearish divergence, okay? So how can we tell, though? How can we tell other than the shape of it, right? Let's go ahead and do some fine counts here. So this is the, I'm going to go ahead and grab a arrow here. I want you to take a look at the volume profile right over here, right? You see that blinking, red and green? I know it's small, so go ahead and try your best to look at it. So we're going to hover over this candle here. You can see there that it's a 67 million, it's in the 8-hour time frame, right? So I'm choosing a smaller time frame on purpose, okay? So I want to focus in on this a little tighter and keep into consideration, yeah, it doesn't matter, but yeah. So here we go. So yeah, this one is 67 million, right? Let's go ahead and hover over this one, which the candle is way higher. You can see there that it's, if I'm not reading it correctly, it's at 34 million. Now this one here is reading 33 million. And let's go ahead and move on to the one that we just printed today. That's 29 million, right? So you can see here that bull volume is starting to drop as we incline. That is a bearish divergence, okay? And this was me trying to I was keeping an eye on this, right? I already knew the volume was dropping, but I felt conviction, and I also backed it, right, with statistics that there could still be a continuation to the upside, which, by the way, the targets that I'm going to present here, I need for you to listen to these words very carefully. These ranges that I'm going to present are extremely wide and encompass an extraordinarily high proportion of data, far beyond what is typical in most practical applications of standard deviation analysis, okay? So I need you to know those words. I need you to process them, because what I'm going to mention here, it is not practical. It is absolutely far beyond the means of what a standard deviation analysis does, okay? So I'm just going to go ahead and keep it there. Other than the fact that they're not certainties, that they're only probabilities, we have to add another factor, because I am leading into very high standard deviation numbers, of which is not typical at all, okay? All right, so now that we know that we have this bearish divergence happening here, what else could be in play? Because it looks like this candle here didn't return anything from which it gave, right? From which it gained, sorry. So it's still looking like massively bullish, right? So let's go ahead and take a look at the ARC algorithms, right? So these are the ARQ algorithms, the ARQ indicators, right? These can be part of your subscription package and tools as well. I want you to notice something that is very curious. I've never seen this before, okay? And I've been using them for a while, okay? So notice the score. If you remember what this indicator is, this is the ARQ DBSI, which gives you a cumulative score of strength, bulls versus bears, right up here in the top right, with the criteria that we have bull volume or bull strength based on the closures of candles above the 13-day exponential moving average, the white line, and the candles that are printing below the 13 EMA, which would be the bear strength, the bear strength, right? So notice up here that it's at a 50-50. But here is what I've never noticed before. Here's what I've never seen before, sorry. Look at the 5-minute time frame, 50-50. Look at the 10-minute, 50-50. I don't know about the 15-minute just yet, but the 15-minute is also 50-50. Let's see the 30. The 30 is 50-50. Hourly time frame, 50-50. Bi-hourly, man. 3-hour time frame, 50-50. 4-hour time frame, 50-50. 6-hour time frame, 50-50. 8-hour is finally when we're starting to see a deviation. That is the bull strength of 79% over the bears at 21. But guess what happens as you move on to the 12-hour? 50-50 again. The daily time frame, we have that deviation too. 77% bulls, 23% bears. But if we move on to the bi-daily, it's starting to diminish a little bit, right? So what could that mean? So I've never seen this before. Granted, we noticed just a few days ago that in the 4-hour time frame, in the bi-hourly time frame, we were sitting at a 71 or a 64% over the bears, right? So what's the deal here? Well, that could be kind of focused around the volume dropping, right? So everything is still pointed to the upside. In fact, we got a buy signal down here from the DBSI. And now if we pull up the ARQ Armor, which is the one that has the real secret sauce behind buy and sell signals, it actually took the profit, right? So it longed down here, all the way down here at 2 zeros and 15, this thing longed, and it had us take profit all the way up here at 2 zeros and 7.8 for a massive gainer, right? So now it took us out, but for some reason it longed us again. And you can see here that all of the exponential moving averages, the wave, the momentum waves are all still suggesting upside. So I'm not sure what we're actually dealing with here, right? But there is definitely no sell signal in sight. Everything is still suggesting a continuation to the upside. If I do it on the 5-minute, even on the 5-minute, we have a new long signal. 10-minute time frame, new long signal printed right down here, right after the short. 15-minute time frame, long signal back here. 30-minute time frame, long signal back here. A lot of the times you're gonna see a lot of influencers talk about the indicators that they promote and whoever else that they promote, but they'll show you only one time frame. They'll show you only the one that gives you the long signal, but they won't show you every other time frame to see what those suggest, right? Because everybody's biased towards an upside. So what I'm going to tell you here is that yes, this is one of the strongest algorithms that we have, and it definitely shows an upside signal in multiple time frames, as you just saw. The thing here is that I'm going to tell you straight up that I don't know if we can trust the algorithms in this point. We have to use our discretion. And that is what makes these algorithms special too, because we also included our discretion in the algo. So hopefully it changes its mind soon and see if we can get that downside. But so far, this thing led a 500% gainer. So I'm not I'm not unhappy at all. Next, let's go ahead and look at the statistics right here, team. And this is where that sentence I gave you earlier, I need you to take it with deep consideration, okay? That this is way beyond any practical applications of standard deviations, okay? This is not normal. Okay, so we were able to tell the upside based on a standard deviation metric, right? So the whole criteria behind this was that anytime that volatility had contracted within the critical contraction zone of 15 percentile and it started an expansion phase paired with volatility with an upside, as you can see here, this was a miss, right? So it has downside here and expansion, so we had to mark that red. That's not a correct iteration, right? The ones that did, I took note of them throughout the entire trading history of the STAL asset on the daily time frame. Okay, so those are the sample sets. This is the data set right over here. We ended up getting a total of 10 iterations on the daily time frame, of which 6 were guessed correctly to the upside. We got let's see, a 60% upside accuracy with an average upside thrust of 89.86% and a standard deviation, which is where 68% of the results land. If you are not familiar with statistics, I'm talking about a normal curve, a standard distribution curve. So that would be at 99.43%. You can already imagine how far beyond we launched way over that early when the signal fired. And when did the signal fire? Fired off down here, right at this candle at the bottom side at 2 zeros and 1 2. And we were already given all of these targets to the upside based on the firing of that signal. Right? So when considering standard deviation analysis, first standard deviation, upper bound and lower bound, second and third. That's about it. Right? So then from there, it starts to kind of widen a little too much. It's a little too far. The probabilities become lesser and lesser as you widen. Right? So I had to, because we've already gone beyond this anomaly, right? This is almost a black swan in statistics, right? So, because we've already gone beyond that, I had to calculate an additional set of upper bounds and lower bounds of standard deviations. And which ones were they? Well, it's actually going to be the 9th, 10th, 11th, and 12th standard deviations, upper and lower bounds. Notice how every single lower bound has a negative number that is statistically unable to be used, right? So now we use the upper bounds only. Okay, so I highlighted here the ones that are most pertinent to our price action. The 9th standard deviation upper bound is landing right at the 3.618 golden mean. So geometrics and statistics are meeting there perfectly. Okay, so that difference there as a resistance range, I'm looking at 0131 to 0133. Price action right now closed at 0125. Okay, so we definitely knocked right into the 1 cent and knocked the 1 0 out, right? So now we have 1 0 left. Okay, so now notice how I have the 10th standard deviation here, upper bound, as not highlighted. Well, that's because it's not landing anywhere really. It's kind of in the middle of all kind of price action, in the middle of geometrics. So that pushed me to look and respect the 11th and 12th upper bounds of the first standard upper bounds of the standard deviation. So that means that here, this target 0154 directly lines up with a 3.272 fib ratio, which I keep in high regard, at 0156. And the 12th standard deviation here comes up to a target of 0166, which is very close to not only the 3.272, but as well as the 3.618 in a smaller time frame. So just like this one here, right? So now we're getting confluent signals for two 3.618 golden ratios in two different standard deviation metrics. So this is rhyming nicely. I'm not gonna sit here and tell you that it's going to reach these topside numbers. I calculated them in the event where we do. But my play is over. Okay, I was very clear about that. You guys all know I'm a short-term trader. I do not hold. Okay, so this move was a massive gainer right here. Shout out to my boy Scalped for bringing this to my attention. He brought this to the community. He got the community another 167% to the upside based on the signals. Thank you, my brother. Make sure to follow him on Twitter, by the way. Right? So, as I will tag him on this right here, right? It's just I don't you know what? We're just gonna go ahead and pull it up as we talk here. So yeah, team, I want you to just please be aware here that this top side target may very well be the very bottom side. I'm sorry, the very top side that we spoke of. Like this could have been that was it, right? I was already telling everybody this morning, like, hey, here comes the 1 cent. Okay, that's my take profit, right? I personally did not trade this trade, right? This was all for you guys, right? I did all this work for you. I did not trade it, so it's all good. Okay, the next one here was the top side of the FOMO targets that we said, right? The FOMO wick. We thought it could be 121 to 129, and we got a 126. Okay, so let's go ahead and just pull up here the account for Scalped, right? So I'm gonna go ahead and show it to you on the right hand side. Please go ahead and follow my man here at NXT PLSE. And this is his account, right? So make sure that it's following these numbers here, okay? You don't want to follow someone else that don't have those numbers. I can only imagine how many, imposters he might have. But yeah, thank you so much, my brother. Thank you so much for providing this for the community. Very happy to be of help here. All right, so now the last part of the analysis, team, let's take a look at this. All right, so we're leveling off a little bit in the 30-minute immediate short-term time frame momentum. Still have an upside pivot on the SMA 14, which is the standard RSI setup, right? Although, yes, it is ARCa RSI. It is my own script, but it's okay. I'm just saying that this is a standard setup. I only did my own script so that I can show you the difference in strength zones, right? This is the bearish control zone. This is the bullish control zone. Bull strength out in the outskirts, bear strength, and you have a bull weakness and bear weakness, right? So we're leveling off in the overbought percentile, right? Oversold is down here, below the 30%. Overbought is above 70, right? So leveling off a little bit there. Bi-hourly time frame leveling off 2. 3-hour time frame leveling off 2, suggesting consolidation. Notice that the 6-hour 2 is leveling off, consolidation. Notice how the 12-hour 2 is suggesting that same consolidation as well. Does that sound familiar to you? Well, the algorithm was already showing us the 50-50, 50-50, 50-50, 50-50. So pretty much when you see scores that are 50-50, this is a gamble at this point. I'm not sure if we're just going to capitulate. I'm not sure if we're just going to try to hold a primary target here, meaning that we could kind of resist here a little bit and then start chopping around within the 1 to 129 cent zone, right? I don't know. That's the thing, is that please remember that we definitely have holders down there that opened up at 2 zeros and 1 2, 2 zeros and 1 5, 2 zeros and 2 0, and all of these people are holding 700% up or beyond, or even into 1,000% up, right? So that's it. I'm just saying, right? So you want to be careful here because this thing could get mangled easily. So be very careful with the next steps that you take. All right, so now the upper time frames, like the daily, sure, it's still pointed upwards, but please remember that this is beyond any historical topside that it has ever faced. So the likelihood of facing a reversal soon is great. I'm not sure. I'm just saying that that's typically how a trader would look at it, right? Now, moving out to the daily time frame, where we still have a massive bullish divergence here that absolutely got validated days ago. And it's still suggesting an upside. A small little kink here that's suggesting a little bit of weakness, but it's still nonetheless still up there. The 3-day time frame here is already reaching the overbought percentile, and it's in the gravitational zone of the overbought percentile, meaning that it could face a resistance here for a pullback. Same thing with the 5-day time frame. It is now piercing the 50%, and it is sitting in the opposing side's gravitational zone, which could face a pullback too. So now there are a couple things that are suggesting that, right? We have the divergence, it's bearish, right? We have also these zones that are suggesting a potential pullback. We're way overheated right here, way overbought, and consolidation of all kinds in shorter time frames. Please be careful. And remember to get enrolled in the ARC Masters course, team. Let's go ahead and start the new year off in a positive beat, right? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good night and a Thanksgiving. And I will catch you at the bell on Friday. Adios.